Jim, how much of an impact do you think the shutdown is having here on this big sell-off?
I actually think the sell-off itself is a non-event. It's the fact that a sell-off has become part of the new normal in Washington that investors are upset with.
You mean the shutdown?
Right. I don't think the shutdown has any particular financial significance as an effect. Rather, it's a symptom of overall chaos, dysfunction, and other factors that investors are upset about.
Well, that's not bullish.
Yeah.
John, is chaos and dysfunction a fair summary of the state of play in Washington? And is that likely to be a fair summary of the state of play for the next 2 years, based on the last week or two?
Maybe not for the next 2 years, but certainly as we get into the new year. I think the real question is really looking at these tertiary issues. The more bigger issues that are faced would be like a debt ceiling debate. Is that going to be a big problem? I think that's what the market's nervous about. The bigger issues at hand, are we going to be able to get through them? That's what the market's questioning right here as we go to the end of the year.
What do you make, John, of that statement from the Treasury Secretary over the weekend and the implications that has for the functioning and control this government has over financial conditions?
Sure. I think we were all a bit shocked to hear that Mnuchin was making calls to 6 bank CEOs and asking about liquidity. Liquidity wasn't even a question on anybody's mind going into the weekend, much less even today. So I think we're all wondering, are we missing something? I don't think we are. I think the short answer is he was trying to give calmness and support to the market, and it backfired on everybody.
I think also that there was more to that conversation that now I can report to you had to do with the economy and questions about what the market was signaling with trade and the shutdown out there and everything else, the Powell uncertainty. So, Jim, how does this all resolve itself? If we get an end to the government shutdown, if they are managing to make a deal, do you expect that to be a catalyst for a market rally?
Well, I think that's part of the equation. You've got to remember that the government shutdown actually polls very well in some places. It was quite a big hit with my New York City cab drivers this weekend. Really, I think investors are waiting to see if the Fed can regain its footing to align its monetary policies with where the economy needs to be. And the other factors out there, whether it's geopolitics, whether it's the slowing economies in the rest of the world, whether it is concerns about Trump bashing the Fed, all of these things exacerbate what's financially, or what is fundamentally a valuation question having to do with the Fed's rebalancing of its monetary policy.
John, I guess all of the discussion today, therefore, has been focused very much on the U.S. When you look at the market sell-off we've had, whether it's in the last week or the last few months, do you think it is U.S.-related factors, or is it, in fact, really the international picture that continues to spook markets most of all?
I tend to think that first...
Without a doubt, the biggest question is global
John,
growth.
Go on.
Yeah.
Sure. I think without a doubt, the biggest question is global growth. What is global growth going to look like going into next year? And are these trade tiffs, tariffs, fights going to manifest themselves into much lower growth? And that's the real question everybody's trying to figure out.
What about the Fed? You didn't mention it.
Well, sure. Fed has some issues to deal with as well, but we're at the part of the cycle where they are going to slow down their rate hikes, and I think Jay did a very nice job explaining that to the market, although the market didn't hear it correctly.
Jim, your own view on that in terms of the international versus U.S. factors that weigh on the market?
Yeah, I think that's about right. I mean, obviously, you want to look at the fundamental drivers of economic growth, and you want to look at economic growth around the world. I do think that the market's misreading of the Fed's intentions in the past 2 weeks has been a particularly important factor. You could see that during Powell's press conference when he talked about how he was going to maintain the policy of shrinking the Fed's balance sheet. The market dropped just as he was saying that. So I think the market is trying to send a signal back to the Fed that maybe he does need to moderate his policies. Maybe there was a bit of a policy mistake. But the overlay that you have from Washington about the Treasury Department standing up and answering questions that no one was really asking suggests that you've got an administration, too, that just can't get out of its own way. The president seems to act against his own interest when either he is bashing the Fed to prevent it from moderating its policies, or he sends Mnuchin out there to do God knows what, a transparent maneuver to try to talk the market up.
So, John, I just want to come back to where we began on the shutdown. Mick Mulvaney, acting chief of staff here, suggested over the weekend on the talk shows that this could last for a long time, which is a signal that the Democrats and the Republicans, it feels like they're very far apart on finding the $5 billion for the border wall. At what point does that become an economic question or potentially have an impact on the jobs numbers, for instance?
Sure. Well, if you do look at this shutdown compared to ones in the past, it's really only about 25% of the government. So it's a much smaller portion than it has been historically. I would say that the markets are realizing this may take longer, not shorter, to success itself. So let's see where things pan out early next year. I think the market really is more worried about the bigger fights at hand, like the debt ceiling debate that will be coming up here at the end of February.